Sandeep, hi, afternoon. I guess that's how this last part of 2024 as well is going to pan out, I guess, because, a whole lot of queues have dried up. You'll have the FII volumes as well abate, and it's going to be very minuscule up until, I guess, Jan when the earnings season kicks off, and then you've got budget, and it's going to be a hectic calendar year henceforth.
Yeah, so although trading activity just does ebb going into the end of December, but the markets move have been there historically, and that's still possible. But then overall, I think there's a greater possibility that given that, like you rightly said, there's a lack of cues per se in terms of any significant policy decision or any significant news flow coming in or likely to come in over the next couple of weeks. The probability that after this initial sell-off driven by US Fed action or the projection they've given for the year 2025, we could see the markets more or less become range bound without any significant dip or significant up move.
Sandeep, how would you summarize the year of 2024 as action packed as it may be? But what have been your biggest learnings as an investor?
So I don't know what the learning could have been. It's just that uh, try to be in the sectors and stocks which we understand, and that's about it. I think that's the biggest learning which investors should have, not get carried away by any sector or sectoral themes or any up move which you think you are missing out, but then intrinsically or by your logic you cannot justify participating in that because of valuation issues or sustainability of profit issues, etc. So I think those were the themes, and this year was a year of two halves. The first half was one where market saw a good up move. The second half was where they gave up a lot of the gains, and I think the second half, as we stand now, markets are down for the last 6 months now since the end of June.
Absolutely. Kunal, how would you summarize, these last 3, 4 months and the way they've panned out? First, that big correction and some sort of resilience now coming back. More importantly, FII is finally coming back after a hiatus of over a year or so. What's it telling you for the year ahead?
So I think first things first, it's indicating that the comeback of volatility has been the more important feature for this year, especially in the second half, because in the first half we had hardly seen any major. In fact, in the last 2 years we had hardly seen any major kind of abrupt volatility. So there were periods of correction for the indices, for the markets, but that was more or less a correction which was in line with the uptrend for the indices. But this time around, we've almost had, I think, 4 or 5 sharp phases of correction, 5% plus kind of corrections for the indices, backed on events as well as news flows surrounding the global environment. So I think that was one of the key features for the markets this year. And I think the classical feature for the market again this year was the comeback of many solid large cap names. So it was not just the mid cap and the small caps which did pretty well. You saw so many large cap names, banking stocks, etc., which made a very strong comeback this year. So I think good amount of mix which we had for this year as compared to the many previous years prior to that.
Interesting. Sandeep, when you look back at the year gone by, some of the stark underperformers as well have emerged. And you've made a case study of course, Asian Paints, which is now languishing at a 4-year low. Tell me, what's your analysis of Asian Paints now throwing up? You think 2025 could be a comeback year, or do you think the stock is down for a reason and will continue to underperform?
My view is that in 2025 the stock will make a bottom, and we will see the negatives get factored in completely into the stock price as the industry dynamics will take place with with Grasim taking a market share which it wants, uh, doing the price competition which is required to get that market share, and then we will see that all the existing players will again start focusing on getting back to profit. So I think sometime in 2025, we'll surely see Asian Paints bottom out. And the point is that many people do not distinguish between a good company and a good management with good products and the valuations and the headwinds they face. I think those are two different things. So Asian Paints remains a very good company, very well managed company, but it's had headwinds hit it, and they have tried to sort of like if you have gone through the past 2 3 conference calls, they have sort of tried to totally brush aside the competition from Birla Opus, which actually is not the right thing to do. And so I think eventually they'll realize that it's real competition and things will stabilize. So my guess is that for people looking at buying value into growth stocks, sort of, we could see some opportunity come into Asian Paint sometime over the next 1 year. Exact timing is difficult to predict.
What's your reading on the charts of Asian Paints? Does it seem like it's anywhere close to a bottom?
So I think it's almost like 15th or the 13th consecutive week of selling for Asian Paints, and in the last 13 weeks the stock has fallen some 1,000 points from 3400 to now sub 2300 mark. So yes, at some point of time we may probably say that the sell-off is getting a lot more extreme for Asian Paints, but to try and trade these stocks and find a bottom becomes very very difficult, because the last pain is actually the most excruciating pain for these stocks for someone who's trading, because the last sell-off is generally considered to be more intense for the stock. So the best way to try and trade these stocks is to wait for the first leg of confirmation of a breakout. It's absolutely okay to buy these stocks maybe 5% or 10% higher than their previous bottoms, but then that's where the confirmation for these stocks would probably arise. So yes, the stock is nearing that phase of maybe a last leg of sell-off, but I think it's as I said, it's better to try and wait for a bounce back. Maybe a close about 2400, 2450 mark could be the first confirmation trigger for Asian Paints.
Right, so that is all about Asian Paints and realty ancillary counter as well. So let me talk about real estate as a whole. Naresh, what's your take on this particular sector? How is real estate looking to you, given the fact that it has seen a good run in the last 2 to 3 years or so? But what are the near-term charts actually indicating for the real estate space, and any stock that is standing out over there?
So, relatively, the stocks have been very strong. If you look at the sideways consolidation, we've not seen a larger dip. The sector is generally supposed to be high beta. We've not seen a similar correction. The stocks which look interesting is, one is Prestige Estates. The stock has come back to the last 3-4 months high, which is closer to that 1950 mark, and the all-time highs are around 2015. So that could be a stock which could break out on dips to 1800, still remains a buy. And the next one continues to be DLF, which has held on really well. Consolidating for the last 8 to 10 months, closer to 830 to 850 is a support. About 920, it becomes a breakout. So that's a stock which can be bought on dips.
In fact, Anisha has put together some research on how the year gone by has been for the real estate sector, and what is the analysis about how the year ahead is going to be for realty. Let's take it across to her.
Well, real estate sector has clearly been the star performer in 2024, with the sector index resulting into a gain of almost 43% so far. Individual names like Oberoi Realty, Prestige Estates, Godrej Properties have fared much better, with the returns being anywhere between 50 to 60% for the year. Even DLF, for that matter, has managed to return a solid 20% gain in the year gone by. In fact, the reason for that is also backed by fundamentals, because at the start of the year, the companies had come out with tall targets when it comes to their pre-sales as well as booking targets. But the companies are likely not only to meet these targets, but most probably are going to beat these estimates as well. At least that is the view coming in from a lot of analysts on the street. For instance, you had the likes of Prestige, Godrej Properties talk about the booking targets being anywhere between 25 to 30,000 crores in the year, and they're more likely that they are going to do a number which is better than that, and that's going to be the case with a lot of other companies as well. But this is not something which has been only driven by more number of sales happening, because if you look at the data that Anirok has to say, in the 9 months of 2024, while the overall housing sales has gone up by just 2%, the supply is actually down 2%, which begs you to ask the question, then what exactly is driving this growth? The growth is actually coming from pricing, and that's the reason we have seen massive shoot up when it comes to the real estate prices in the country. per square rates in the areas of Gurgaon, etc., have shot up quite meaningfully, and that is what is driving this growth. In fact, what is also supporting the sentiment is not only the first-time home buyers or the actual users, it's the institutional flows which are coming into the sector as well. So if you look at the institutional flows that Colliers has to talk about, it's a whopping $4.7 billion is what we have seen this year. In fact, even if you look at the investment profile, as far as the alternates or the AIF investments is concerned, real estate is clearly the favorite because that has seen inflows to the tune of almost 75,000 crores, and that tells you that it's a lot of investment money also which is going into the real estate sector, and that is partly the reason of the prop up that we have seen in the prices and the fundamentals. In fact, but the big question is whether this rally will sustain as we head into 2025 or not. Well, most of the brokerages believe that this is likely to be the case. JM Financial believes that premiumization is a trend which is likely to continue. That's benefiting the sector, plus diversification as well. Colliers on the residential market is saying the uptick in luxury is expected to sustain. In fact, the expansion into tier 2, tier 3 is also something that can play out really well. And not just residential, industrial too is expected to have a good run given the fact that supply-demand dynamics continue to be quite favorable. So overall, 2024 was a stellar year. 2025 might not see the same rate of return, but perhaps the fundamental and structural up move might continue.
Oh, yes, absolutely. And we'll discuss that with Sandeep as well in just a short while. For now, of course, we're going to take a very quick break.
You're watching Closing Trades on ET Now, and before slipping into the break, we did see how the real estate sector actually performed in the year 2024 and what we are expecting, or analysts are expecting, for the year 2025. So Sandeep, let me come to you and ask you about the real estate sector, given the fact that now we are seeing actually luxury demand actually sustain for the sector. No doubt that the last 3 years have been good, but is it fair to expect that sort of a repeat performance in the year 2025 as well for the real estate space?
I would seriously doubt it. I would think that real estate as a sector has done extremely well at a time when overall consumer sentiments have been muted, and real estate demand has sustained despite the overall sentiment not being so great. So, which is a dichotomy of sorts, but I think it could be driven by a variety of factors, uh, which are also related to the fact that the real estate sector had almost 10 years of a downturn before this revival cycle started. So I would think that for most of the real estate companies, the huge positives are already in the price. I would be very, very surprised if the sector actually outperforms in the next year, because on ground demand in terms of number of apartments, etc., seems to be slowing down. Supply has been reasonably high, and the entire price hike cycle also seems to have played out. So I would think that this is one sector which has done extraordinarily well, but at the current valuation, it's placed at a point of time where I don't think in 2025 it has the ability to outperform.
So, Sandeep, which sector would you bet on? And do you think it would be banks where the year ahead is going to belong to? We've already seen HDFC Bank make a comeback. Maybe the rest of the pack as well would join in, with ICICI Bank continuing to be a leader too?
Eventually, I think financials will do well as the rate cycle turns, and that's something we need to see when it turns. But eventually, financials will do well. This year was one where, because of tightening liquidity and RBI's reluctance to do anything on the easing cycle, we have seen credit growth continuously trend down, and now credit growth and deposit growth are more or less aligned. So as the cycle eases off, we could see credit growth pick up next year. So banking and financial should do reasonably well. I think capital goods, infrastructure companies could continue to do well. Most of the consumer names have got badly beaten down, and I would think that many of the large consumer names will also. So I think next year, if you look at overall markets, so if we are expecting overall markets could do maybe 10-12% kind of return, then it's possible that the large consumer companies from current levels, even if they come back 50% of what they have lost over the last few months, could still deliver 15-20%. So I think that will be one sector where risk, where investors who want to keep risk moderate could also chip in.
Interesting. Sandeep, let's revise that list. What within consumption seems like could give you a 15 to 20% kind of return?
I think most of the large consumer names, be it, let's say, Tata Consumer, Godrej Consumer, Dabur, or even HUL, etc. So I think in all these companies, I would think that the downside could be restricted to maybe 5-7%, but upside could be 15-20%.
Right. Sandeep, let me come to you and ask you about these two heavyweights which have actually underperformed Nifty this year as well. It is HDFC Bank as well as Reliance Industries. Where are they headed? Because I'm sure a lot of investors tend to lose patience with both of them. No doubt they're quality stocks, long-term buys, long-term portfolio stocks. But what about both of them? What should one do if they're holding in their portfolio, given the fact that they have not surprised any of them positively?
So HDFC Bank had a bad run, but then over the last few months, it's outperformed. And to that extent, I think most of the people who hold HDFC Bank could have breathed a sigh of relief. So I would think that the valuation derating for HDFC Bank seems to be more or less through. So if going forward from next year, they come back to the credit growth trends which they had historically, where they would grow in line or somewhat higher than the market, then there's a realistic possibility that HDFC Bank should do well. Reliance has been more intriguing. So I was never very bullish on Reliance because of the fact that they keep on doing capex in some sector or the other, and that free cash flow doesn't come through. But then we have actually also bought into Reliance just last month, and the stock's not gone anywhere since then. Because in my view, the oil and gas profitability seems to have bottomed out for Reliance. Even Reliance Retail, we should see the bottoming out of performance. Telecom profitability should improve, and the new business investments they are doing, so that always could be cash guzzling in the near term. But many smaller companies doing similar investments are getting very huge valuation in the market. So it's very somewhat intriguing that Reliance is getting a negative effect because of that, while many smaller companies are getting a positive effect. So I would think Reliance is down almost 30% from the top, and there's a realistic possibility it could outperform next year.
Okay, Sandeep, always good to chat with you, and we'll see you again tomorrow morning, I guess. But Kunal, let's have your closing ideas.
So in terms of closing trade, I would be looking out for Zydus Life from the pharma pack. That's something which is starting to look attractive. The stock is nearing a breakout just above that 920 plus range. So that's a stock which I look to buy.
And Naresh, what are your closing picks?
Again, from the pharma side, that would be a buy on Lupin. The stock is very close to crossing a 3-month high. Looks like a breakout in the making, could again go back to 2200 plus levels.
All right, so both of the closing picks coming in from the pharma space. Remember that one is bucking overall market weakness in trade today. But on that note, we slip into a break on this edition of Closing Trades. More on the other side, don't go anywhere.